I want you to be properly prepared to tackle question 1 of the SBR examination. It contains a pre-populated spreadsheet, and it's a little bit different from anything that you've seen before at university or FR. My name is Tom Clendon, and I'm an ACCA SBR subject expert, and I help students pass their SBR exam. Now, what I want to do is to keep things simple, to make sure that you understand the mechanics, the architecture of question 1, and how to approach it. So I'm going to be building this up from the beginning. Now, the pre-populated spreadsheet was introduced in September 2023, but I'm recording this in March 2025. And so it reflects the changes introduced by IFRS 18, presentation and disclosure in financial statements. And it means that I am sharing the wisdom of having taught hundreds of students who've gone through the system now and having read numerous examiners' reports. Now, question 1 will be on groups, but it could be a group statement of financial position, or group P&L, or it could even be a group cash flow. You will be presented with one of these statements in the pre-populated spreadsheet, maybe in full, or perhaps an extract. And then you'll be told there's a mistake, there's something that needs correcting, updating, and this encourages you to go and change the numbers and update the pre-populated spreadsheet. Primarily, those issues will be around group accounts. But to be honest, there could be any accounting standard also being tested in question 1. I saw a recent one where there was 6 or 8 marks on pension adjustments. Now, examiners' reports are invaluable sources of information because the examining team, believe it or not, want you to pass the examination. And they want you to learn the lessons of mistakes other students have made that came before you. Time and time again, we get this refrain that students have spent too much time on question number 1. And I think there's a number of potential reasons for that. Maybe the students are not properly prepared for how to do the question. Maybe the question looks a little bit disorientated, or maybe they're doing things which are simply unnecessary, like putting a total column in their answer. That does not earn you any marks whatsoever. So don't bother doing it. That's what a pre-populated spreadsheet looks like. That's the question form. And that's the model answer. That's the ACCA model answer. And you will notice in the ACCA model answer, as highlighted, the total column is there. But you are not providing in the exam a model answer. You are wanting to pass. You're wanting to get the marks. There are no presentation marks for putting that total column in. So please don't do it. Don't do it. Now, another thing that I have picked up from reading the examiner's reports is that effectively you want to be making friends with the marker. You're wanting to make your script easy to mark. So it is strongly recommended that you label the columns. You don't put all of your adjustments in one column. You label your columns and you separate out your workings accordingly, and you can see they're highlighted. Yeah, in an answer, those headings, that's good examination practice. Good examination practice to label your headings. Now, you do have to think. You're doing your answer, it will be marked. And what the examining team says in the reports is ideally you avoid putting in unreferenced random numbers in a cell as part of a formula, because that can be quite time consuming or tricky for a marker to mark. So a better approach is to show the numbers separately within a working in the spreadsheet and then enter the working total within the adjustments. Let me show you an example. So this is how you might use equity accounting. You might be calculating the share of the post-acquisition retained profits, and this number of 18.6 might have to be added to the investment at the top and added to the retained earnings at the bottom if it hasn't already been determined. So rather than do a complicated or a cell formula within a cell, show your workings. Leave an audit trail. Make your script easy to mark. Now, what I'm about to say may be patronizing. Yeah, what I'm about to say may be patronizing, but the examiner reports time and time again that a significant number of students are getting the pluses and the minuses wrong when they are correcting the spreadsheet. And if you get the plus or minus wrong, it's not going to earn you the marks. So I want to avoid any doubt. And I want to take you through some practical, simple examples to make sure that you understand. And you're at liberty to pause this video. Yeah, when we come to it, because there are three types of question: a balance sheet, a P&L, and a cash flow. And I'm going to take you through all three scenarios with simple numbers so you don't need a calculator. So this is the setup. Let's keep it simple. We have an impairment loss of 50,000 on the goodwill. And this relates to a 90% owned sub where NCI has been measured at fair value. Now in the exam, we're obviously going to have to update the pre-populated spreadsheet because this hasn't been processed. But also in the exam, we're going to have to justify. We're going to have to explain. There will be a requirement asking us to articulate and justify the numbers. And I'm imagining 2 marks. So think, and if you want, pause. What kind of words would you be using? Now for me, it's very significant that NCI is measured at fair value. Because when NCI is measured at fair value, goodwill is said to be in full. And this means that when we come to have an impairment loss on that goodwill, both the parent and the NCI will suffer. And they will suffer in proportions that they share their profits and losses. So because we've got an impairment loss of 50,000 and it's a 90% sub, then I hope you don't need a calculator to realize the adjustments that we are going to be making. This is the intention. This is what's going on in your head. Your intention is to reduce the asset by 50,000. Your intention is to reduce the group profits by 45, 90%, NCI's at fair value, goodwill's in full, and to reduce the NCI by 5. Now to execute that, you need to do some pluses and minuses. To execute that, you need to reduce the goodwill by 50 because it's already 1,000 in the columns. If you put in 50,000, that's the equivalent of 50 million. You are reducing the goodwill by 50. You're reducing the group retained earnings by 45, and you are reducing the NCI by 5. Plus, minus. Updating the spreadsheet in a plus minus way. Yeah, that's how it looks. And forgive me, I'm not going to do the total column because that would be hypocritical. Now, for some of you, you might want to think about the journal, but not if it slows you down. This is a complete answer already, but in the group statement of financial position, top and bottom, when you make an adjustment, ultimately we'll have to balance. So in journal entry terms, those of you who like journals, those of you who think in journals, yeah, that's how the journal entry looks. And in a group statement of financial position, journals can be helpful in articulating and explaining what you are doing. But typically, yeah, when you're updating the spreadsheet, you will get all of the marks for the pluses and minus. Journals will be marked only if you have been specifically asked to do journals. Yeah, only if you've been specifically asked to do journals. So I have to be a little bit careful about journals there. The marks are all in the plus minus in my simple example and in the vast majority of exam questions too. 1 down, 2 to go. So let's think about, yeah, the group profit and loss account. And let's think about, yeah, updating this example because the parent has sold goods to the subsidiary. Now again, I'm imagining that there's a couple of marks available for a narrative, for an explanation. So think about how you would justify the accounting entry that you're going to be processing in a minute. And in a narrative answer, surely words like substance over form and faithful representation are going to be used. The whole purpose of preparing the group accounts is to reflect the group as if it were a single entity. And you've got these two separate legal entities that you're banging together. But the truth is they're under a single control. And the consolidation process is looking to reflect that. And therefore, we're going to be eliminating the intra-company transactions because from a group perspective, there's no sale. The sale was purely in-house, purely internal. And we need to reflect that in the adjustments. So what's the adjustment we're intending? We're intending to make the group revenue go down. We're intending to make the group cost of sales go down because they are both overstated by 10,000. So in terms of pluses and minuses, the group revenue needs to be 490. So you need to minus that by 10. Now the cost of sales needs to be a smaller number. It needs to be 390. Yes, it needs to be 390. So the adjustment you're making is not to minus 10, but the adjustment you're making is to plus 10. Because by adding 10 to the minus 400, you get to minus 390. And if you're not sure about that, rewind, listen to me again. Yeah, that's the adjustment that you would have to be making. That's the adjustment that you would have to be making to pick up all of the marks available. Okay? Now, in this particular example, I can show you a journal, but it's very unusual that you can see both sides of a double entry within the P&L. If we were just dealing with an impairment loss, the only thing you would see in the P&L is the extra expense. You wouldn't see the reduction in the asset because the asset's in the statement of financial position. So I don't particularly want to get involved in this journal business when I'm thinking about a P&L or when I'm thinking about a cash flow. So the group P&L has been updated for the elimination of the intercompany sale by minusing 10 against the revenue, adding 10 against the cost of sales, because when you want to make a minus number smaller, you end up with a plus. Cash flow. Question 1, pre-populated spreadsheet, group accounts. Could be a balance sheet, could be a P&L, or could be a cash flow. Now the adjustment that needs correcting here, well, adjustments that need correcting here is in the reconciliation of operating activities, depreciation is too small by 12, and there's a profit on the disposal of an asset which hasn't been captured. Now we've already got depreciation of 50, so perhaps there's been a fair value adjustment and additional depreciation of 12 hasn't been processed, hasn't been dealt with. What I'm wanting to do is add back that additional depreciation, yeah, because depreciation has caused the profit to go down but not caused the cash to go down. It's not a cash outflow. So we're adding back the depreciation because the depreciation has reduced profit but not reduced the cash. And we're trying to reconcile the operating profit to the cash generated from operating activities. So I will be looking to effectively add back the depreciation. I will be effectively looking to add back the extra depreciation of 12. Now where there's a yin, there's a yang. And the profit on disposal has increased the operating profit, but not brought in any cash. Profit, when you dispose of an asset, the proceeds are the cash inflow and they're dealt with in investing activities. What we're looking at here is the profit, which is not the cash flow. And if you're adding back depreciation, yeah, then you've got to deduct the profit on the disposal. You've got to deduct the profit on the disposal. It goes the other way. Yeah, it goes the other way. So let me show you. So we've got the words. We can explain what's going on if we're having to. And the adjustment we're intending is to add back the depreciation and to introduce the profit of 3 into the reconciliation, and that'll be done as a minus. So we add back the depreciation of 12, which hadn't been taken into account, but we minus the profit of 3. We minus the profit of 3. And this is then how it looks. This is then how it looks. So your total column, not that I'm going to show you the total column, is 62 for the depreciation, and you would have a figure of profit on the disposal of -3. Don't do journals. We can't read, it's cash flow. Don't think about it. Yeah, we're doing a plus minus, we're doing a reconciliation of profit to cash. Yeah, it's not appropriate really to be thinking of journals. It's not applicable. Yeah, not applicable. Right, next steps. You can listen to this video again. I want you to understand it. I've kept it simple. All right? But exam questions are there available for you. Yeah, you've got the study hub, you've got the ACCA practice platform and the mocks, and I can specifically signpost you to questions in the practice platform. Yeah, specimen 1, specimen 2, yeah, sample 2, example 2 in the September-December 23. There's a P&L there. So you can go and put these simple ideas into practice. All right. Now, why am I showing you a picture of Anfield? This is where Liverpool FC play. I'm not a Scouser, and I'm not a Liverpool football fan at all. But I'm showing you this picture because when Liverpool play at home, they're comfortable and they normally win. They know the atmosphere. It's familiar territory. And I want you to think that the ACCA practice platform as your Anfield. I want you to get comfortable with it. Yeah, you can access this through your My ACCA, because when it comes to the real exam, you're going to have to be manipulating those windows, opening up those exhibits, yeah, and typing up your answer. Look, thank you. Thank you for listening. My name is still Tom Clendon. I'm still an SBR online lecturer, and my vocation is still to help students pass the exam. I hope you found this video useful. If so, please like, please comment, please subscribe. Thank you very much.